on what's going to be. Today's figure is 4.7%. Yeah, so many times these guys have been very accurate, but so many other times, especially in the previous months, with non-farm payrolls, the consensus has been, it has been very misleading for so many people. And yeah, people are starting to doubt it. I think for these past few months, that consensus was really, it was really something that people were looking out for. Looking forward to those figures, those big figures they were giving with the non-farm payrolls. But anyway, for some events, it's very difficult. Those are monthly events, the non-farm payrolls. But for these annual events, yeah, it's a bit easier for them to gather some data over a very long period of time and give you a very good estimate. So here, it might be, it could be almost accurate. Yeah, and if you've been looking at the charts, like charts with the euro, Euro USD, it's having some small trend. Today is a Monday, so it's a bit, the market is a bit slow. There aren't so many high, these very, very high impact moves. You're not getting these very long candlesticks. It's a bit stale, but you can make some good profits in a market like this, since it's not moving with any bias on some kind of economic activity or some announcements that just drag things. But today there have been some good these charts, the gross domestic product affecting the euro. This one here, this event has been bad for the euro, but there isn't a lot of market impact on the chart. If you look at it, so that annualized GDP event, previous figure was 3.9%. What was expected was actually 4.7%, but then it came down to 4.6%, and it was still somehow negative for the euro. The actual figure was actually better than the previous figure, but because of expectations, it's a bit it was still not good enough. So for many people who are trading, you see this 4.6%, and it looks very good because it's bigger than the previous figure, but the expectations are much higher than that. So this one came out negative, but on the chart, it still has that that smooth rise that is taking place right now. And so if you're looking at the 1 hour chart of this Euro USD, it looks like some kind of retracement. It looks like a retracement. We're already below the 61.8. We drew some lines last week and saw how far we had gone. So it is some kind of a retracement. And in the 1 hour chart, the RSI is most likely going to hit that overbought position. If that happens, then we shall have an overbought position with a top that is lower than a previous top that has the RSI below an oversold position, and that will give us a very good entry to start selling. So you can start counting pips just in case this actually pans out. You count pips from below down here where the rise has started. There are about 50 pips. Okay, in total there could be about 60 or 70 pips if the price keeps on rising. If that happens, then things will be very good for this Euro USD. You can sell it. Okay, so today I just wanted to look at the metals. I have them lined up. I have silver versus the euro, silver versus the USD, then gold Australia, gold CHF, gold USD, which is normally just gold, then gold versus the euro, then platinum and palladium. So those are the charts that I really want to look at today. So this one is silver versus the euro. It's XAG EUR, that is the silver versus the euro. So for this one here, the previous trend for the sake of using Fibonacci's, there is one previous trend which you can see in this 1 hour chart. Sorry, shall take this 4 hour chart. So here we have, one thing that you can just keep in mind is we have that trend line down there. So silver is, yeah, it's right now it's at some kind of a support level. If you consider this first point, this second point, and this third one, yeah, so this could be a resistance. This could be a support leading to to a buy. Yeah, so price might move upwards. It's possible, and if it's moving upwards, then you can draw the Fibonacci sequence there. Yeah, if this one become an upward trend, and the most likely area we're going to hit is this 23.6. I want to see the spread. The ask line is there. Okay, you can see the spread inside there. So if price moves to this 23.6, there is about 26, about 20 pips of silver which you can take. That is if we have a trend that has formed now. Reversals are normally a very difficult thing to get. You have to wait for it to actually pan out before you get in. So this one we have that trend moving upwards. In these bigger charts, like in the daily chart, it's sort of it's not really, it's like a range market. So this is mostly a range market in the daily chart. Okay, looking at smart charts, trying to see if we can get some short-term moves. Let me load this RSI and see. Yeah, so we have the 30-minute chart heading for this overbought position, and if that happens, then yeah, we could most likely have a downward trend starting to appear. And okay, for the 1 hour chart, I'm trying to look for reasons why you buy or why you should sell, and see which side wins. So here there isn't really much to go on. Everything is oversold. So okay, so there's a lot of evidence pointing to a buy, but yeah, in Forex anything can happen. Yeah, in this particular chart, there's a lot you can expect from silver versus the euro. But anyway, this is just one chart. Let's move on to silver versus the US dollar. So we have the same kind of movement. The only difference between the other one and this one is this one has actually broken. This one has broken. It has broken the support. So here we have there's a difference. The other one was all the price above the support line, but this one here has broken below. And yeah, so here we're probably going to be looking towards maybe we can look towards selling, but selling will have to be below this line. There is this support level that where price was supported there, and yeah, if it comes below that one, then we can start selling. Right now, being here, anything can happen. Price could break up above this support line, which has now become a resistance, and it could go downwards and break below that one. So to be very sure, you wait for a break either upwards or downwards there, and then you can know that there is some market movement down there. But anyway, these metal charts are they are quite tricky. They're not like Forex charts which you can easily predict. These ones you have to be very careful. You have to be very, very careful. Okay, so looking at this in a 1 hour chart, it really looks like it's it's being resisted. It's being resisted there. And let's look at a smaller chart. So this smaller chart's heading into an overbought position. See the 15-minute chart, and has already hit an overbought position. So there's a very good chance that this could become bearish. So that will also mean maybe if silver is selling against the US dollar, could it also be selling against the euro? Or could the euro be going down? Could it be losing its value against silver? So looking at these two charts, in the 4 hour chart, This is XAGEUR. Okay, yeah, this is what we were looking at earlier on, and we had these bottoms just like that. So maybe if you don't consider the first bottom, here is another theory. There is that bottom touching this bottom, and they move like that. So that gives you a clean break there, moving downwards. Yeah, that's another theory. But anyway, we have to wait for the market to still move, maybe sometime in Wednesday or Thursday, maybe, or even tomorrow. We wait for those kind of things to happen. We see what to do with these charts. You have to be patient with Forex. You can't have trades all the time, but when you get a good trade, you take it. Okay, so this is gold versus the Australian dollar. It's in some kind of a range market in the 4-hour chart. Looking at the daily chart, yeah, same thing. Yeah, some sort of a very brief range market there. There's no way of telling if this is a reversal. Okay, there is. There is a way of telling if this is a reversal. So we have a very this is an upward moving. Okay, this is an upward movement. In this chart, we have a bullish movement there, and we have the first top, which is this one. With this top here, then it continues to get a little bit higher with that one, and higher again, and another one that is higher. So without any, so here we have higher highs. So many tops moving upwards, and on this RSI, we have the very first high, which is at the top, and they keep on getting smaller. So there is some kind of divergence there. Not picture perfect, but you take what you get. If we look for some significant levels with this, with the Fibonacci retracement. Okay, so here it's not really okay. There are some levels which are somehow make sense. Like this one here, price was supported there. There is also some support and resistance right there, and this one as well. There is some kind of support there. This one has very good support, looks picture perfect. Then you have a price in between the 38.2 and the 3.0. Yeah, then it breaks above, and yeah, it's not yet perfect, but yeah, the good thing about these Fibonacci levels, you can actually drag them a little bit further to get some concrete areas of support and resistance. Okay, like there. So I've dragged one to a point where price hasn't yet reached, but I have dragged it there to sort of predict an area of reversal sometime in the future. This is a daily chart, so this could take maybe a week, maybe a month. So, but with these levels here, you can see that there is some significance here. Yeah, we have real support there, we have real resistance there. There is price breaking and now struggling at that support level, which was a previous resistance level. Then there is price there, there is this one, we have this perfect break there, another perfect break there. We have good support along those lines, and resistance is good resistance there, good support there. So okay, so by changing the levels of the Fibonacci retracement, I think it was there. So by changing those levels, you can easily predict and see some significant levels in the past that have been there, and maybe predict that, you know what, if this price continues moving upwards, that could be an area where it will be resisted along those lines, because there's significant movement in the past. Yeah, so that is gold versus the Australian dollar. That's a good chart. Now there is a gold versus the Swiss franc. Yeah, so in the daily chart, it's still in some kind of a trend market. Problem with gold is that you don't have pure trends. You don't find a very good trend. Okay, so this is the 1 hour chart, and there isn't. Okay, this is all these high levels. Price is moving higher. It looks to be at the same line. It's moving higher a little bit. Okay, so assuming that this is a continuing upward trend, let's say we have all these bottoms touching that area. It's a kind of a thick support level, a thick trend line where all prices are touching, and this is the last. This is the most recent touch. So looking at that one, we can move maybe into a 30-minute chart, look for some short-term profits. Yeah, there is that trend that is that what looks like a trend there. Load this Fibonacci is here and start getting some, start looking for some short-term trades. As ones can get some good scalping. So by drawing this, there is some good significance in the back. Then there is price being resisted at that 23.6. Resisted there twice, then a perfect break, and then a perfect resistance at the 38.2. So maybe if price breaks above the 38.2, could probably go for about 49 of this XAU CHF gold versus the Swiss franc. So there's some good charts, but then this one here looks like it could be a retracement. Maybe price will come back down, or it will keep moving upward. Looking at how price has been moving, okay, that is one scenario to buy there. Then let's see if we can get another scenario. Okay, so here it's basically it's not really that. It's not something very common that you see, but I don't know if this is okay. So here we have this price moving in between here. So we have our middle line there. This one is not it's not like a triangle that is closing in on price. This is some kind of triangle that is opening up. So the bigger part of the triangle is on this other side where we can't predict how far it, you can't really predict how far it will go. But that's how it is. So we have this medium point where prices are being resisted. Not very picture perfect, but this can do. Okay, it's not very picture perfect, but we have prices bouncing off in the middle. Every time price is moving from the top to the bottom of this open triangle, it somehow bounces off in the middle, comes down, moves back upwards, bounces off in the middle again. So there's that middle activity taking place, both a support and a resistance, and the area is being expected as price keeps on moving further. So if you're buying here, you could really watch out for that midpoint. So the Fibonacci's were showing that this is 38.2. If price breaks above that one, maybe to the 50 point, it could be somehow moving diagonally there. But anyway, to be careful with that. So here we have an angle that is open, and the points which are which are narrow in the beginning part. Then they just keep on spreading out. So yeah, this could be ending anytime, but it's a good indication of where you should put your hopes. Yeah, so you should know that there is that middle line there that could it could put your hopes down. Okay, so this one here, this chart for most people is like the guest of honor. Gold, XAU USD. This is the chart that so many people love. The actual chart that is called gold. So for this one here, there's that big drop. And there's that big drop that happened. I think every chart that had the US dollar as secondary currency has that drop as well. And for gold, it's still stagnant somewhere there. And it looks good. So here we have a sold position in the 4-hour chart. Let me look for something else. Okay, so here we have some kind of divergence. Some kind of divergence. Here we have the RSI coming from a very oversold position, moving upwards, and here it is very steep. This was the oversold position there. If you try to point out this exact point where it was actually that one, and the next one is there, and that one. So this is our divergence. So price comes, stops there, and it moves on to that point. So we have some kind of very steep divergence, but then we still have lower lows and higher lows. So probably we're going to have some good upward trend there, and maybe when this MACD crosses above, it's normally the trend. You have the lower lows, the higher lows. Then when the MACD crosses from a dominant oversold position below zero, then when it crosses up above zero, you can start buying. Other people start buying immediately at the bottom there, but anyway. So okay, this is just in case we are buying. In case this is some kind of a short-term reversal. This can be very useful. Now, looking at these Fibonacci retracement levels, this one here is already very significant, the 23.6, 38.2 as well, 50.0. There's some good sequence there. So, price reaching the 23.6, that could be somehow obvious. The pips left in between there are about 65. You can take maybe 60 pips, and maybe to the 38.2. If you continue buying, that is about 165 pips, 160 pips to be on the safe side. So, that is quite good. So beyond that, it could be risky, since okay, where's that chart gone? XAU, okay. So it could be a bit of a risk, since we don't have it's not very definite what's happening here. But that is one way of looking at that chart. Maybe we can look at this support line. Can look at this support line and see how it has been moving. And so for this one as well, we can look at these tops moving upward, and this middle line, can draw it out, maybe starting from there. So we have that kind of movement. So if we start buying, that is some area to look out for. But if price breaks below this support, then you can probably sell up to this other one, that other support down there where all these prices have been touching. You can look at the history. You have you have that line here. It's first of all, it's a resistance, then it becomes a support again, another support. So if price breaks below that one, if it goes up, you've seen how far we should take. If it goes down, then you can take the number of pips that is in there, about 220 pips in between those two levels. So so if price breaks below this support level, you can go down there. If it starts buying, then the retracement levels there, you can have those in consideration and see what to do with that. Okay, so this one is now gold versus the euro. Gold versus the euro. Okay. This one you can leave it for now. Almost running out of time. Here is platinum. Platinum is a chart that people hardly even know about, but those are some good charts that can give you some good money. Platinum looks like it has come from an overbought position, and okay, not so much is happening there. But if this is a reversal, we have those double tops up there. If we use some price action there, double tops, and we expect some kind of, some downward movement. We have this break of these double tops, price broke below, and it could keep on moving down. So if we have a downward trend there, we can, you can start tracing how far it will go. So by looking at, let me put this on the body of the candlestick there, and this one well at the top. Okay, that's where we are. So price has actually respected these Fibonacci retracement levels. There is good resistance, and there's good support at that 23.6, and very good support at the 38.2. Yeah, so most likely when price breaks back below that 38.2, you can take 150 pips, so the 50.0, where there's very strong resistance in the past, so there'll be very strong support there. And if it goes below that, then there is this last line fence where you can, let's see, if you take it from now, you can get about 480 pips. If it is bearish, so signs for a bullish movement in this one. Maybe if we take this previous trend, and we see this area in between the 100.0 and the 1.8 there. Price was strongly resisted there, so in order to buy, maybe we can buy above that level there, above the, in between the 61.8 and the 100.0. We could start buying from up there, maybe to the 100.0, simply because if the price really breaks above, then it will come with a lot of force, so that you can take some money, about 325 pips to 100.0. Yeah, so that is also a possibility. So if price is going down, we have seen how far to go, and if it's going up, we have seen how far it can go. Now the last chart of the day is Palladium. This is one of my favorite charts. Yeah, so Palladium, very, very strong chart. Looking at it in the daily chart, there's that rise. Anyway, Palladium is, if you've heard of it, Palladium is a metal that comes, it's sort of a byproduct when they are trying to cut platinum. Yeah, it's a very, very strong metal. So when they are, when they are working on platinum, trying to, that process of cutting through it and all that gives off a byproduct, which is Palladium. It's sort of 2 times stronger than platinum. Very expensive, the most expensive metal in the world. Okay, so right now it's at the very top. This one here,